We have Joe Battipaglia, Stifel Nicholas, Kudlow and Company contributor Jerry Bowyer of Benchmark Financial, and Jim LeCamp of RBC Wealth Management. And waiting in the wings, our Fed experts, former Federal Reserve Governors Wayne Angell and Lyle Gramley, plus Michelle Girard, senior economist for RBS Greenwich Capital. Welcome, everybody. Let me go to my stock market panel first. I need a quick whip around, gentlemen. The question tonight is a very simple one. Why did stocks sag after the Fed announcement? Jim LeCamp, let me begin with you.
Larry, there's really no conviction from buyers or sellers. On the way down, we started to see volume dry up as this market tested its low levels of the year, the levels of March and January. Now you just don't have any positive catalysts, any positive drivers. We saw these earnings after the close that are a very good example. We're not seeing any acceleration in any parts of the economy. So I think the market's a little cheaper here, a little safer for buyers to wade in, but I don't think there's anything going on that's really exciting people. I do want to know, who's going to do something about these speculators that drove oil prices down today?
The speculators who drove down oil prices, but they fell a couple, $3. Very good question. We'll get to you later. But Jerry Bowyer, why did stocks sag? Stocks opened up pretty strong today, got even stronger midday. Why did they sag after the Fed announcement? What was in that announcement that was bothering stocks in your view, Jerry?
Let me summarize the announcement. Bernanke to dollar, not yet. That's what it is. That's your New York Post headline. Bernanke to dollar, not yet. And that's the message. It's, I might get there eventually. I'm not sure. I'm a little confused. I'm balancing risks. I'm still looking in the rearview mirror at last year's credit crunch. I'm not quite sure what to do, but I think I might get to you, dollar. And we need a strong dollar in order to have a recovery in the stock market.
All right, very interesting. And Joe Battipaglia, welcome back, buddy. And I want to ask you the exact same question for this whip around. Why did stocks sag? And I'm interested to see that in this stock sag, the two best sectors were energy and materials. You might say those are inflation stocks. Everything else went down. Now, do you agree with Jerry Bowyer? And I guess I would paraphrase by saying Bernanke didn't really show us an inner Volcker today, did he?
No, absolutely not. The old trade's back. Sell off the dollar, sell off financials, and buy anything that's anti-dollar, which happens to be commodities. Unfortunately, what we heard today was a bedtime story. He hopes that inflation will go away as the economy is soft, but don't worry, the economy's not too soft. So we have risk to the upside, risk to the downside. Now everyone go back to sleep. Unfortunately, what he failed to talk about was the reason he did all that he did was to try to bring around some resolution to the credit issue. However, there was only a phrase mention of the credit crisis. In other words, he's showing no leadership to the marketplace. And the dollar, well, he's forgotten it once again. So I'm not surprised that we're now heading lower because the Fed has abrogated their responsibility to provide leadership.
All right, but just a quick follow-up, Joe. You're asking him to do two things. Number one, you're asking him to acknowledge your point of view that credit conditions are worse. Okay, that's your view. I respect that.
No.
But at the same
back it up, Larry.
you're asking him to support the dollar with a tighter policy. A lot of people see that as a dilemma, a conundrum, if you will.
Okay, it's not about whether I'm right or wrong. If we go back to last August and we look at the series of dramatic action that this Fed has undertaken, commentary by Paul Volcker, Alan Greenspan, and everybody about what this Fed has done, it's to help salve the banking system. Now you're at a pregnant moment in time when the TED spread is rising again, mortgage rates are up, not down, and the economy is rolling over, and he is mum on where we are with this. And as of September, when all this toxic paper has to go back on the banks, and as MBIA and AMBAC both blow up now, what is he going to say about this? And if he says nothing, you're back to financial risk, and that's why the stock market's rolling over.
Jerry Bowyer, just as a quick one, Jerry.
The banks are going through this. Okay, I'm sorry.
Now, just let me get to Jerry. Is the economy rolling over, Jerry? You know, I thought it was pretty strong durable goods orders today.
Yeah, what rolling over? What pervasive economic statistic, an ISM or a coincident indicators or something that's not just one sector, what pervasive indicators rolling over? I think the second quarter is going to be stronger than the first quarter.
There's a recession in housing which no one can argue. Auto sales dropped 25% in arguably the best month of the year. And consumer confidence has hit a new low, not only the current condition, but the future condition.
Look, there's a two-way economy going on. Joe's right, but there's strength in the economy as well, and it can all be explained away by globalization. If you look at our exporters, they're doing pretty well. Their earnings are pretty strong. That's why people have jobs. That's why consumer spending has been a little better than expected.
Some sectors are weak.
So there are areas of the economy that are strong, and the banking sector is very weak, so the Fed is stuck.
Just to throw something in there, by the way, tech is very strong. Tech has been very strong. Tech was very strong today.
Well, that's
tech even survived the Fed.
That's until you got the RIM numbers and the Oracle numbers.
Joey B., should they loosen or tighten? Should they loosen or should they tighten?
They shouldn't have loosened in the first place.
All right, right now, what should they do? Loosen or tighten?
They have to stay pat. But they've got to tell us where
you just complained about not defending the dollar. That would be tighten. See, you have contradictory views, and you're imposing your contradictory views on them.
No, I don't have contradictory views.
Tightening is not the only way to fix the dollar.
The issue number one is the financial calamity of our banking system. There is no leadership at the current time. There is lost confidence. That means you lose confidence in the dollar if you're a foreign investor. So this Fed, who has now opened the kimono to Bear Stearns and every other guy who wants to walk in and put toxic waste with them, have sacrificed two-thirds of the Fed balance sheet to date, and they've not resolved the problem, and now they don't talk about it. That's where the dollar loss is coming from.
That was last year's.
And delinquencies are actually up.
By the way,
delinquencies are up for the banks.
Can we just put the
loan reserves are not covered?
Can we just put factory orders and shipments up real quick, just to straighten that out? On a quarterly basis, it's showing very significant strength. That's your business CapEx orders. First quarter looks good. So far in the second quarter looks even better. And even the shipments numbers, which go right into GDP, are showing a very strong second quarter.
It's just about to roll over. Any minute now
if we can get that up on the full screen, business CapEx shipments.
Your economy is growing at 1% a quarter. What more evidence do you need? Where is the 3% that was supposed to generate jobs? You're losing jobs in this economy.
Where's the negative 1% that we were supposed to get?
Where's
the recession?
The point is you've got no growth and you're losing jobs. How do you expect to have earnings go up in a condition like that?
How about a last final whip around? In 6 seconds, I want you to tell me what you're going to do in the stock market, buy or sell tomorrow. You're coming back later. First of all, Jim LeCamp, opening tomorrow. 5 seconds. What are you going to do?
Wait and buy the strong areas like energy on dips.
Okay.
Don't be aggressive.
Okay. Joe Battipaglia, 5 seconds. Market opens tomorrow. What do you do?
You're in a weak market period here. The time to average in is later this year.
Okay. Jerry Bowyer, market opens tomorrow. What do you do?
Stay in equities.
Stay in equities. Our market panel has much more work to do.